Council to order at 3:04 p.m. Jody?
Good afternoon. Please note council meetings are streamed live and recorded on YouTube. Attendees acknowledge that in accordance with Section 20 Sub 2 of the Access to Information Act and Section 4 Sub C of the Protection of Privacy Act, names, addresses, and other details provided when speaking at a council meeting will be publicly shared. Should you have any questions related to the collection or disclosure of personal information, please contact the Legislative and Advisory Services Division for the Town of High River by sending an email to atipp@highriver.ca.
Thanks, Jody. Adoption of today's agenda. I'll ask for a motion from Councillor Nychuk that Council adopt the agenda for the regular council meeting July 13th as presented.
Happy to give you that motion, Mr. Mayor.
Thank you. All in favor? Carried. Adoption of minutes from the previous meeting. Ask for a motion from Councillor Cooey that Council adopt the June 22nd regular council meeting minutes as presented.
I'll give you that motion, Mayor Snodgrass.
Thank you. All in favor? Carried. Public comments time. If there's anyone that wishes to have any comments on any of the items directly related to today's agenda, you're welcome to do so. Bonnie?
Is it on?
It is now, yeah.
It is on. So I was looking at the 2026 bylaws that were passed. I just was looking for something. But I noticed that the operating line of credit bylaw hadn't been passed in January, and was going to ask a question about that. But then when the agenda came out, it was on this agenda. So my question is, if you're only passing the operating line of credit now, have you been using the operating line of credit in 2026 over the past few months?
I think when we approve the operating line of credit from the previous year, it carries over until we, how does that work, Jordan? It's a good question.
It was a standard procedure when I was working.
I'll get an answer from.
Thank you for the question. Yeah, it's an annual bylaw, and typically it's done in January. We do have to do it once a year, and so this is the time that we slotted in for it. But yeah.
Okay, but my understanding when I was involved was that you couldn't use the line of credit till this borrowing bylaw was in place. So that's the second part of the question. Have you been using the line of credit? And if you have been, has it been used for capital expenses like the pool?
Has not been used for the pool because the pool has been paid for through the reserve accounts, right? So that none of that would need to come from a line of credit. So, you know, have we been using the line of credit?
Yes. Yep. Yeah. We.
Okay.
But to answer your question about that is. It isn't, my understanding the MGA doesn't have it's not like a my understanding is it's not 365 days, it's an annual bylaw. So I'm not sure if it was required for January per se. But
okay, it was a standard procedure that we always used. Second question, related to
Just on that one, Bonnie, can we look into that with MGA rules to make sure how this goes? So if something needs to be rectified, we can take care of that.
To what you said, Craig, so then, I mean, the pool has to be up over 20 million. There must be a fair amount of money that's had to be taken out of investments or some such,
out of reserves.
Or grants or reserves, or wherever that money is sitting.
Reserves.
It's been taken out.
Absolutely.
But reserves were a certain amount, grants were a certain amount.
Yeah.
I don't know if you've received all the money for the grants, because usually that's after the project is completed. Am I right?
Well, lots of those grants were old previous grants that were
actual
carried
dollars
over and we're just
bank.
using them. Yeah.
Okay. And I have one other quick question, which when I was looking for bylaws or looking at something for bylaws, is the supplementary tax bylaw was also always passed in January so that we could charge supplementary property taxes. And then you had to have that in place by the end of April.
Okay, Jordan?
I don't see that on the list of bylaws that you've passed. So I was concerned about that.
Okay, we'll get an answer.
Through the mayor. Supplementary bylaws are optional, so we don't actually have to pass, we don't have to do supplementary assessments every year if we don't want to. And by the time that we do need to pass a supplementary bylaw, let me rephrase it this way. We are actually going through like a new assessment timeline, and supplementaries are, because they're optional, we may not even do them. That this is a discussion we still have to.
Well, then I would really like to see a supplementary assessment roll to see how many taxes we're not charging to the people that would normally get a supplementary tax. That's
Yep,
my question.
fair question, absolutely.
Okay,
Thanks, Bonnie.
thank you.
Yep. Anyone else? Mr. Kinghorn.
Thanks. Just item 7.3, letter of support for Heritage Inn International Balloon Festival. Thank previous councils for supporting us, and hopefully this council will support us for 2026.
Sounds good. Thank you, sir. Anyone else? Minor plug. Yeah, bias there. Okay, we'll move on. 2026 rate bylaw. Shelley and Jordan for the affordable housing rental rates.
Ready? Okay. Thank you, Mayor and Council. The item before Council is Bylaw 4664/2026, the 2026 Rate Bylaw General. The purpose of this bylaw is to repeal the current rate bylaw and replace it with an updated version that includes the affordable housing rental rates reflected in the approved 2026 budget, tenant notices, and rental agreements. No other changes to the rate bylaw are included. I will pass this over to Shelley to walk through the details of the rate changes and the affordable housing program. Administration is recommending that council support the bylaw as presented.
There we go. Thank you, Jordan, and good afternoon, Mayor and Council. One of the important projects that Community Support Services has the privilege of managing, along with support from our ops team, is the Affordable Housing Program. The town of High River owns 30 affordable housing units. We own 6 units at Prairie Sound, and then we have the Mundy Park complex. And in that complex is 8 one-bedroom units, 8 two-bedroom units, and 8 three-bedroom units. As indicated in the report, the rates have not increased in 2019. That was intentional during the pandemic in 2020 to not increase any rates. And then there was the cost of living following the pandemic. And so we were doing our best to not impact an already vulnerable population. However, it's come time that we have to get back on track and doing some more regular increases to our rent. This particular rent increase was slightly higher than we anticipate doing going forward. However, it was approved in the 2026 budget that we would do a mid-year budget, our rental increase, and which is now. We will then proceed on a more regular basis, ideally at the beginning of the year, even though January is a tough time for residents, to do a rental increase so that it is easier to align with the rate bylaw, and we would begin that in January of 2028. The rental rates that are currently reflected in the rate bylaw then have to be adjusted as of today, and we are looking for council to provide first, second, and third reading to bylaw 4664 of 2026, and that is just the general part of the rate bylaw. I'm happy to answer and address any questions or concerns that you may have regarding this.
Thanks, Shelley. Any questions from council? Councillor Nychuk?
Thanks, Mayor Snodgrass. Thanks, Shelley. Thanks, Jordan. In terms of the report we had, this increase will not put us at cost recovery. Were we previously, I guess from 2019 and before, were we cost recovering on
We-
affordable housing?
My apologies, Councillor Nychak, yes. We have been, our rents to date have been covered through, our rental revenue has covered the costs to date. I do anticipate coming back to council before the end of the year, looking at the 2027 budget, that we do have to look at probably some preventative maintenance budgets. So we have, as of January this year, we opened those complexes at Mundy Park 16 years ago. So we've done our best to maintain those buildings. And back when we got the grants, they were built on a grant that required us to do what was called a modest build, which was arborite, linoleum, to keep the costs low. And those are now starting to go in these units. After the flood, we were able to replace some of the appliances, such as fridges and stoves and those sort of things, and those appliances are now starting to go. So our operations team has worked diligently in trying to do the preventative maintenance piece and replacing those as need be, but that is slowly starting to happen. So this small increase will help address some of those costs, and as we continue to do that, we'll continue to address that. But this is the first year that we will be requiring some additional funds.
Thank you.
Councillor McGonigal?
So you've notified them that there's a potential rental increase, and have you had any feedback?
We provided notification to residents back in February so that we could address any concerns that they have. We are fortunate that this project is kind of co-managed through our FCSS team. So if there are any questions about they need access to subsidy programs or referrals to different programs, we have been able to do that in advance and to provide that support, which is partly why the program works, because we can provide that person support with one hat, and with the other hat we're a landlord. So we have had no concerns, and anybody new moving in is at that new rate already.
Just as a follow-up, there's a mention in here that some people moved out. Was that because of the potential increase in rates or for other reasons of their own?
Yeah, other reasons. We do a couple of things. One is that there's a minimum rate, a minimum income that residents must have, also a maximum income. So it is meant to house a certain population for their financial needs. And so if they're making too much, then we do give them notice that they're not returning. Other times we have just some issues throughout their tenancy that we do let that tenancy run out, so they have their full 12 months, but then we give them 3 months notice to move on to something that might be more suitable for them.
Thank you.
Shelley, do you know if there's tenants that are on programs, social programs such as AISH? The reason why I have a concern is because we know our provincial government has taken another $200 a month out of AISH recipients. On our end, yes, we have to keep up with operational expenses and maintenance and everything on these facilities, but it's just kind of a...
Which is why it has taken us 6 years, Mayor. It's why it's taken us 6 years, Mayor, for that exact reason. It is a challenge. So yes, we do have some residents that are on AISH. The benefit of AISH is it's a guaranteed income. The challenge with AISH is that it's a low income, and so something like this does impact them. We are fortunate in High River to have West Winds Communities, which receives government support, which can provide rental subsidies. And so a number of our low limited income residents are receiving subsidies. And so when their renewal comes up with receiving that, they can now put this new rental rate in to help them that way.
Guaranteed only with who the government is.
Yes, and there is no guarantee. Yes, there is no guarantee.
Councillor McGonigal. Okay, I'll ask for a motion from Councillor Barton that council give first reading to bylaw 4664-2026, the 2026 rate bylaw. Council give second reading to previously mentioned bylaw, and that all council present give unanimous consent to proceed with third and final reading of the previously mentioned bylaw.
Yeah, my motion, Mayor.
Thank you. All in favor? Carried. I'll ask for a motion from Councillor Brookwell that council give third and final reading to bylaw 4664-2026, the 2026 rate bylaw, and the council repeal bylaw 4635-2024, the 2025 rate bylaw.
I'll give you that motion, Mayor.
Thank you. All in favor? Okay. Thanks, Shelley. 2026 operating expenditures line of credit bylaw. Jordan?
Thank you, Mayor and Council. The item before Council today is Bylaw 4665-2026, the 2026 Operating Expenditures Line of Credit Bylaw. This is a routine yearly bylaw that allows the town to maintain access to the operating line of credit with RBC. Under the Municipal Government Act, the town cannot borrow unless the council authorizes the borrowing through the borrowing bylaw. This bylaw provides that authorization for operating purposes. The purpose of the line of credit is to support cash flow when the timing of tax revenue does not line up with expenditure needs. For example, the town has regular costs through the year, but property tax revenue is not received evenly through the year. Some taxes are received through the tax installment payment plan, or TIP, and some are received around the tax deadline. The line of credit gives the town access to short-term cash flow support if needed. This bylaw authorizes borrowing up to $7 million at any one time. This does not mean the town has drawn $7 million, and it does not mean the town plans to use the full amount. It means the town has approval to access up to that amount if operating cash flows require it. Administration reviewed the borrowing limit under the MGA. The town's 2026 municipal tax levy is $17.5 million. The proposed line of credit is $7 million, and the town currently has no unpaid operating borrowing principal. That leaves $10.5 million in remaining operating borrowing capacity under the MGA. The bylaw also includes a standard borrowing provisions. Interest would be charged at a rate set by RBC at the time of borrowing, up to a maximum of 15% per year. Interest is calculated daily and payable monthly. The borrowing term cannot exceed 3 years, and any amount borrowed must be repaid in full within that period. At its core, this is routine annual bylaw that allows the town to maintain access to its operating line of credit, should it be required for cash flow purposes during the year. The bylaw also repeals the 2025 operating expenditures line of credit bylaw and replaces it with the 2026 version. Administration recommends that council proceed with the required readings and adopt bylaw 4665/2026.
Thanks, Jordan. Questions from council? Pretty standard procedure. Councillor Jones.
Thank you, Mayor Snodgrass. I actually just did a quick look at what the MGA says about this bylaw, and it does not prescribe an annual review, a renewal of this credit, but municipalities do it for various reasons, and one could be your financial institution requires it, or also, depending on what the number is, it could change, like how much you're requiring to borrow.
Thanks, Jenny. So I'm hearing Councillor McGonigal.
Just a quick look through, is it the intent of this bylaw to repeal last year's bylaw and apply this year's bylaw? Because I don't see that in here.
There is the repeal. And the second portion of the council will repeal bylaw 4638-2025, the 2025 operating expenditures line of credit. So that will be cleaned up.
What paragraph? Sorry, I'm not seeing it.
It's on mine. It's on my script. I don't know that it's.
I'm not seeing it in the actual bylaw.
It's in the motion, and then can you scroll to the?
Won't be in the bylaw itself, it'll be in the motion. Because that won't be part of the bylaw.
Keep scrolling.
They've got it highlighted on the,
It's
well,
normally
that's
the
on
very
the,
last line. Keep going, keep going, keep going. Repeal.
Thank you.
okay, thank you. So I'll ask for a motion from Councillor Jones that council give first reading to bylaw 4665, 2026, the 2026 operating expenditures line of credit bylaw, and the council give second reading to the previously mentioned bylaw, and that all council present give unanimous consent to proceed with third and final reading of the previously mentioned bylaw.
I'll give you that motion, Mayor Snodgrass.
Thank you. All in favor? Carried. I'll ask for a motion from Councillor Nychuk that council give third and final reading to bylaw 4665, 2026, the 2026 operating expenditures line of credit bylaw, and that council repeal bylaw 4638, 2025, the 2025 operating expenditures line of credit bylaw.
I'll give you that motion, Mr. Mayor.
Thank you. All in favor? Carried. 2026 tax recovery public auction sale terms and conditions. Jordan.
Thank you, Mayor and Council. The item before Council is the 2026 tax recovery public auction sale terms and conditions. This report does not approve the sale of any property. It only approves the standard terms and conditions administration would use if a tax recovery public auction is required in 2026. The Municipal Government Act requires sale terms and conditions to be included in the public auction advertising. Administration wants to ensure those terms are approved by council before that process begins. The terms cover items such as bidder due diligence, deposit requirements, payment deadlines, GST, transfer costs, possession, and what happens if a purchaser does not close. Any property-specific matter, including the reserve bid and property details, would still come back to council separately. Administration recommends that council approve the 2026 tax recovery public auction sale terms and conditions as presented.
Thanks, Jordan. Questions from council? Councillor Nychuk.
Thanks, Mayor Snodgrass. I was going through my notes to find the highlighted section, but I'll just speak to it real quickly. In there's a section about council, administration, connected parties not being able to participate in auction, and it doesn't mention anything about direct family members. And I'm just throwing it out there that might be a consideration of council. If council isn't going to do it and you have a significant other, that perception of information might be there, that there might be an amendment to that we include that. Councillors or immediate family. I'm just putting it to council to see if that's something that raised a flag for anybody else. Obviously that's there for protective reasons so that we don't have information that somebody participating in the auction doesn't. So anyway, it jumped out at me, so I'm just throwing it out to you guys to see what your thoughts are. Thank you.
Anything else from council? See none? Councillor McGonigal?
I would agree with Councillor Nychuk that that would be an appropriate addition.
Jordan, thoughts?
Yeah, it seems reasonable to me.
Councillor Barton?
Do we need to define that a little bit more before we add it? What's immediate family? Like, I have no issues with that. Just, is it, your spouse and your kids, or is it your parents, or is it, your brother-in-law, or what, right? So I don't disagree with it. I just think that needs some definition.
What's your amendment sound like, Councillor Nychuk?
Thanks, Mayor. I'm just looking at it's item 20, prohibited bidders. As it reads right now, it's the auctioneer, councillors, chief administrative officer, designated officers, and employees of the town must not bid for, buy, or act as an agent in buying any property offered for sale unless directed by the town to bid for or buy a property on behalf of the town. It's a good question, Councillor Barton.
Now half of your buyers have disappeared.
Now half my buyers have disappeared, yeah. Because I guess it could relate to any of those positions, right? The auctioneer, a councillor, our CAO, designated officers being, yeah, members of SLT, whatever that might be. How do you write something in there that is not wildly detailed and still captures the intent of ensuring that there's a respected transparency to any of those processes? So,
What's the main concern going back to the start?
what's my concern with it? Is just that ability of, again, we keep coming to this word transparency that means all kinds of things, right? And it comes with that, just being open enough to say, you know, that nobody involved in the process is involved in manipulation or benefit of said action. So that's really what I'm trying to catch. I would like to say that, you know, that everybody that I work with, I don't have that concern with, whether it's somebody on council or somebody in administration. But in the rights of making our residents, the public, municipality feel safe in that, it was just something that jumped out at me. Right, wrong, or indifferent. I'm not saying that I'm going to vote against it if it's not there, but I just thought it was a piece perhaps to add. Like, honestly, I'm okay with it going either way, but in, you know, the current context of things, it's just those types of details are more readily apparent and observed than maybe previously. People have those concerns, and I just want people to feel assured that the process is legitimized through measures to protect the taxpayers or the residents, the public. So
spitballing, would it be, you know, concerns over one of our spouses purchasing a property that we're...
Well, here, let's pick on my wife because she's here.
I wasn't going to do it myself.
I'm going there because you and I were on the same page. So if I was perceived to have some information about a property that we as a municipality were auctioning off, and I saw some benefit in it financially, let's be really clear about it, that, oh geez, I think I can pick this piece of property up, Michael's the bad guy. I can't do it as a counselor, but I go home and Tara and I are having dinner and I say, hey Tara, open up the checkbook because tomorrow we're going to go to auction and there's this property that we're going to bid on and this is where it's going to lie and this is the information I have. Like, please take it the wrong way, take it the right way for council and public. I'm not saying anyone here has that intent. I've never felt that about anybody I've worked with, but just in the interests of I'm looking at the lawyer at the table in terms of legality, to cover the basis and provide assurance and just the right language in there. That's why I felt it should be there. But the catch-all is what? You know, significant others, direct family. I'm not quite sure what that language should be.
Counselors and spouse, partner, kind of. That's where you want to capture it, is in.
Your immediate family, because I've got two boys at home that I could do the same thing with, right? Like, Kai, here's my checkbook. Go and bid on this thing.
Okay, you've opened a can of worms. That's fantastic. I appreciate it. Councillor Cooey.
There's a document that we have to sign. I don't know if we do it yearly or when we are elected. And I just wonder if I believe it's parents, spouses, and siblings potentially. Would it make sense to follow those sorts of guidelines?
It's not only that, it's in-laws. It's step-in-laws.
It is, you're right.
Like,
Yeah.
I got everybody.
That is true. Anyways, I just thought if we had something kind of existed that we have to report, I think if I'm wrong, we have to report whether we own a property along with them. So there is some guidelines as to what we have to report on that, so maybe it would make sense to follow those guidelines.
Yeah, there's a ton of disclosure, all of us that are elected, as to who you have to list as your next of kin and related people that you're in business with, and who your stepfather-in-law is. Exes. The list is long, Jamie. So, yeah. Councillor Jones.
Thank you, Mayor Snodgrass. I don't necessarily disagree with your spouse, but past that, it's an open can of worms. If my adult child wants to buy a place, I'm fine with that. Like, if I'm not going to live in there and it's not benefiting me any, I don't see any reason why they couldn't do it. If we want to go into spouses, I'm okay with that, or significant others, people we live with, that's okay. But outside of that, this list could just go on, and then there's nobody left in our small town who can buy this place at all.
It wasn't the intent to create some laundry list. Sorry, I can leave now if everybody'd like.
Well, we're going to work this one now. Councillor Barton.
Okay, I got two things. One is, you guys still use a checkbook? See? You don't use one. You e-transfer. Anyways. Okay, the second point is I agree with there's got to be some delineation, but at the end of the day, we have this disclosure that we have to do every year. And then second of all, it's a public auction. I'm not going to bid on it. I could actually tell somebody that's not related to me to go buy it, right? But you got to prove it. So what's the benefit to me? There's no benefit to me, right? Like, I don't know. I think we're getting in the weeds on this one. I think it's just, I like what you guys put together. I think it was great, and it's something to start with. And I don't know. That's about all I have to add anyways.
Okay. I'm okay with adding councillors and their spouse/partner as a midway here, but Councillor McGonigal, back to you.
But generally, historically speaking, if you're going to engage in corruption, you're going to draw your brother-in-law into it. That's, just saying. But if you put something along the lines of...
this is how you do it.
Yeah, exactly. That's how the ones who really know how to do it do it. So they're going to go, if somebody's going to be corrupt, they're going to go outside their immediate family. But you could say immediate family with a significant relationship, or family with a significant relationship. There's different ways you can define it. Defining it up here is not the best way. Taking it back and refining it might be the better way, but the benefit is that we know, or staff knows, or whoever, when a property is going up for sale. We also know what's coming 6 months down the road, probably, in terms of a development proposal or whatever. So there's that added advantage of information that we're trying to protect the public from. And, as I say, I don't think this table is the best place to define this. I think we should send it back for a careful definition. Just my thoughts.
Back to you, Councillor Nychuk.
Okay, my suggestion of a friendly amendment, I'm going to rescind it, and to Councillor McGonigal's point of administration taking it back, I think there's a larger consideration there across multiple facets, like you just mentioned, that we can put this back on the floor without my friendly amendment, we can pass this knowing that we're all upstanding citizens. We'll pass it for next year or for any other future considerations like this. We define that language, how it reads, and then we can implement it more for the organization as a whole where it's appropriate. Is that?
So no amendment to today's motion.
I'll pull my my friendly amendment and we take it away for, as Councillor McGonigal said, for defining it better by other means and resources.
Wonderful. I'll ask for a motion from Councillor Cooey that Council approve the 2026 tax recovery public auction sale terms and conditions as presented, and that administration be authorized to use the approved 2026 tax recovery public auction sale terms and conditions for any parcel of land or designated manufactured home offered for sale at a tax recovery public auction in 2026, subject to any property-specific reserve bid or approval required by council.
I will give you that motion.
Thank you. All in favor? Carried. Well done on the discussion. CIBC Investment Advisors presentations. I know there's CIBC gentlemen here as well as Jordan.
Yes. The next item is a briefing from the town's investment advisory team at CIBC Wood Gundy. Administration works with the advisory group for investment management and investment advice. Their team supports the town's long-term reserve portfolio and works with administration to ensure the town's investment aligns with legislation, policy, liquidity needs, and long-term objectives. This item is for information only. There is no decision required from council on this item. I will now turn this over to CIBC Wood Gundy to introduce their team, provide an update on the town's investment portfolio, and share their outlook going forward.
Thank you, Jordan, and good afternoon, Mayor and Council. Thank you very much for having us here today. My name's James Hobson. I'm joined with my colleagues Chart Chahal and Jacob Cranham, and together we represent the Hobson Chahal Poulias Advisory Group at CIBC Wood Gundy. As Jordan mentioned, we manage the long-term investment reserves for the town. We've been doing so for almost a decade now. We have been in front of this council before to discuss investment policy, but we thought it's about time to give you an update on the investments themselves, a little bit of an update on who we are, how we manage things, and then we're going to jump into an economic update just to give you an idea of kind of the macroeconomic themes that we're seeing to help you make more informed decisions. So I'll jump right into it here if we can jump on to the next slide. Can I have this one, Jake? Sorry. Thank you. So just a bit of background on our team. We're one of Canada's largest and most experienced teams in customized investment management. Everything we do is fully customized, unique to the town itself. We don't buy pooled funds. We sit down with administration and structure a portfolio specific to the town's liquidity needs, which has been a great help over the last several years. We've been serving Canadian municipalities for over 40 years, so our team started in 1983. Right now we're managing about $4.5 billion in public sector funds for over 100 municipalities nationwide. The majority of those municipalities are in Alberta. Many of your neighbors utilize our services for their long-term investment reserves. Operational efficiency, so cost-efficient execution. We'll pool money together with other municipalities, nearby towns and counties, and leverage what we call economies of scale. When you shop the major banks with $2 million, you get a certain rate, but if you shop their banks with $100 million, you get much better rates. So that's a value that we add for the town. We also have open architecture, so we work for CIBC, but we have abilities to invest with any bank across the country, as well as the provinces. So we're not specifically bank loyal. We just want to get the best rates for the town. And institutional strength, so backed by the full resources of CIBC Bank. So on the next slide here, without getting too much into the details, just a brief overview of how we kind of fit into the investment portfolio process. Everything we do starts with governing legislation, so the MGA, Section 250 investments. The investments we buy for the town are the same as the investments we buy for other municipalities across Alberta. Everything has to be fully compliant with the MGA before we consider it for investment for the town. Once we're inside that safe box, again, the last time we were in front of this council, we were reviewing the investment policy statement, making sure that there are adequate controls in place beyond just the MGA. The MGA is quite simple, so we want to make sure that the portfolio is structured, whether it's us managing it or another financial institution, that the investments are matched to the unique needs of the town. Market environment, so I'll let Chart and Jake jump into this next. What are our kind of return expectations? What does the economic environment look like? And where can we maximize the returns for the town, try and keep tax rates as low as possible, and boost revenue to support administration? Portfolio management, it's a little bit outside the scope of today's discussion, but it's how do we allocate the funds, what investment tools are we using, and then review and rebalancing, which is what we're doing today, making sure everyone's up to speed with what we're doing with the portfolio. So on the next slide here, these are just really briefly here, kind of what we'd call the 4 pillars of institutional investment management. Number 1 is preservation of capital. So safety of principal is our primary objective. We're investing tax dollars here. Everything we buy is principal guaranteed by the issuing bank or province. There's no equities in the portfolio, so everything is purely fixed income. Risk mitigation, so as I mentioned with that investment policy statement, making sure that the portfolio is diversified amongst different issuers, asset classes, terms, things like that, so we're not putting all our eggs in one basket. Once we're in that safe box, it's how do we maximize the rate of return, subject to the constraints that we're held to under the MGA and the investment policy, to generate as much cash flow as we can, to grow the portfolio, and to protect the reserve funds from the eroding effects of inflation. And then last but not least is liquidity needs. So this has been really important for the town over the past 3 years especially, as there's been withdrawals that have happened, making sure that if the town needs money, we can have it in the bank account within the next business day. So we have a lot of liquidity controls to make sure the funds aren't locked in, they're liquid, everything we buy can be sold prior to maturity. And without getting into too much detail, I'll give you just a snapshot of what the portfolio looks like today. If you can bring up the next slide there. So right now at CIBC Wood Gundy, there's about $33.5 million invested for the town. The yields to maturity at market, which would be the minimum rate that we can expect to receive, is 3.63%. As I'll show you on the next slide, we typically do much better than that, and we have, through active monitoring and trading and things like that. Duration is quite short in the bond world. I know municipalities generally consider anything over 1 year as long-term. In the bond world, anything under 10 years is short-term. But even within that short-term space, we've intentionally tilted it through discussions with administration to make sure that the portfolio is liquid in case there's any withdrawal needs. You can see there on the left just the issuer diversification. So we shop all the major banks and provinces and allocate the funds accordingly based on where we're getting the best rates at the time. Bank funding needs change over time, and it just depends on sort of when we're placing the money in terms of the best rates and who's providing the best investment products, but very well diversified. In terms of asset allocation, this was the discussion at the previous council presentation we did. We reduced the restrictions on provincial bonds, so right now it's roughly 60-40, 60% roughly in bank bonds and 40% roughly in provincial bonds. In terms of credit quality, so even though everything we're buying is principal guaranteed, we want to make sure that the guarantee is coming from an accredited institution that has a strong credit rating by Dominion Bond Rating Service. As you can see there, the majority of the portfolio, so 80% of it, is in AA rated bonds and about 20% in A rated bonds. So overall, in a nutshell, the portfolio is structured with a lot of conversation with administration, specifically surrounding liquidity needs, focus on capital preservation, and how do we maximize returns subject to those constraints. The next slide is what we'd call kind of the money slide. How have we done? We've focused on the last 3 years, just given that that's been a period of pretty significant withdrawals from the portfolio. Over the past 3 years, the portfolio's annualized just under 6% per year, so 5.911%, which when we're dealing with bonds, we're not buying anything in the equity market, those returns are relatively high based on what we would expect. And then it just shows you by calendar year how the portfolio is done. Year to date, we're up just over 2%, which is relatively in line with what bonds are paying if you think about that as a 4% year-over-year return. 2024, the return was just under 9%. Interest rates spiked, inflation was high, and we were able to take advantage of some of those higher yielding investments for the town. But overall, we're happy with how the portfolio is structured. Again, a lot of conversations back and forth with administration. They've been phenomenal to work with. And I'm going to turn it over to Chart to go through the economic portion of the presentation.
Thanks, James. Thanks, James. The only thing I would add to that previous slide as well is, as you guys can see, that we want to highlight, James touched a little bit on, we customize the portfolio for the town. You guys don't own a unit of a pool. And you can see that even though there was large liquidity needs and a larger withdrawal, we were able to exit a lot of positions at material gains while funding the short-term liquidity need requirements. So very important feature of the portfolio to see how it worked through very non-normal interest rate and market environments that we've kind of lived through in the next couple of years. And Jake will get into what we kind of see going forward, and then hopefully we can make a little bit of sense for you in the future.
Thanks, Chart. Good afternoon, Mayor and Council. So yeah, an economic update is difficult in normal times. These days, one tweet can change everything. So we'll do our best to kind of get into it a little bit, make sense of some things that are happening, and sort of talk about what we're looking at going forwards, and then how that actually affects, the portfolio and, of course, the people. So, of course, if you've been following the news at all, you've seen there's a lot of headwinds out there. Obviously, inflation and rising costs, the ongoing tariff war, supply chains being broken up by geopolitical issues, and then, of course, rising interest rates potential, and artificial intelligence, which, depending on where you're sitting, could be a tailwind, could be a headwind, but we'll talk a little bit more about each on the next slide. So we'll try not to make this too much about the US, but ultimately when we're talking about economics, we just have to. We do about 70% of our exports to the US, so no matter whether we like it or not, we're going to have to deal with them. And one thing we really want to look at is not just economic numbers, but actually what's kind of behind the numbers and what we're really seeing. So the US has posted a couple quarters of reasonably strong GDP growth, which might be surprising in context of tariffs and geopolitical issues. However, if we really break it down, then what we sort of see are there's a few detractors that we would generally have predicted. So obviously immigration policy has shifted. Typically speaking, moving people out of the country and not bringing them in will slow GDP. Fiscal policy, so that one's expected to flip a little bit as the more lenient tax cuts come into play. And then, of course, the tariffs and uncertainty being the big one. And you can sort of see the big blue bar at the bottom, which is for the tariffs and uncertainty, which is being combated by the red bar at the top. So what is that? That's the impact of AI on GDP. And so what we've really seen is, okay, so growth looks good, but a significant portion of that growth is actually just this AI spending. And what we've had there is significant infrastructure investment. And then, of course, you have these companies sort of cross-investing. And so there's two big questions. So A, will the infrastructure investment continue? It's sort of started to taper off, so we're not sure that we're going to continue to see that. And then are we actually going to get meaningful long-term growth from the actual AI investment that we've already had? So GDP numbers look good, but it's very concentrated in one sector. And the other interesting thing about that is when you're getting GDP growth from capital, it tends to benefit the people who have capital. It's not necessarily that the labor force is getting stronger. It's you have this one very specific sector and you're getting a lot of the growth concentrated right there. And it's not necessarily benefiting the United States people equally. But we'll bring it back to Canada. So on the next slide here.
Can you speak directly into your microphone?
Oh, sorry.
Yeah, Councillor McGonigal's got hearing assist
Absolutely.
through there.
Is that better?
Really relies on. Thanks.
Awesome. So on the next slide, we'll bring it back to Canada a little bit here and take a deeper dive into tariffs. So around April last year, you can see that pretty significant drop where the red line there representing the sectors exposed to tariffs drops right underneath that 100 index for the actual productivity that we're seeing. So this was sort of the big question. We weren't really sure what was going to happen, whether the tariffs were going to be sustained. and ultimately whether or not they're going to make a meaningful impact on GDP. And of course, not entirely surprising, we've seen that there's been a pretty big divergence in sectors that were hit by tariffs versus sectors that were not. And so if we go to the next slide, we can see in particular, of course, lumber, iron, vehicles, aluminum. A lot of these different sectors have been significantly hit with the CUSMA uncertainty right now in terms of renegotiating the trade deal. This is potentially a pretty big sector of volatility. Now, one thing Chart's going to get into a little bit later, which is sort of good news, is that if you notice which exports we're looking at here, they're typically not the ones that are most pertinent in this province. We'll let Chart get into that a little bit more, but on the next slide, this is really important. So as I mentioned earlier, most of the exports from Canada, about 70%, go to the US, so we are not very diversified in terms of our total trade. Towards the end of last year, the government put out a goal to double exports to non-US countries in the next 10 years. A lot of the economists were fairly skeptical that that could be done. I mean, I hope it gets done. Hope is often a bad strategy in the investment world, but all the same, there's a serious effort being made here, and you can actually see that year over year, while the U.S. growth has been significantly slower to other countries, we're actually getting a decent bit of a lift. And I guess just to finish that one off, we've increased trade with China. There was the deal to get the EVs in and send canola back over to them, and we're getting more natural gas over to Europe. So the efforts are absolutely being made. Whether or not they can offset the U.S. trade loss is kind of the big question. Ultimately, we're going to be reliant on them, but at least in the meantime, we're making serious efforts to expand that trade. And I'll pass it over to Chart.
Thanks, Jake. So I think one thing that's very important to remember for us as Canadians and consumers as well, when we're looking at the U.S. MCA, CUSMA, NAFTA, whatever you want to call it these days, renegotiation, it's very easy to point to that and go, the manufacturing industry is suffering because of all these tariffs, and the resource sector is going to be doing good because we're not as sensitive to those sectors. Yes and no, absolutely that's true, but it's very important to point out that the manufacturing industry wasn't doing the best going in to this tariff war that we went into. So it was a pre-tariff problem. It's, in my opinion, it's unfortunate that the tariff war was the catalyst that it finally took to start looking at diversifying our economy, something that we in this province have been very strongly preaching for a very long time. But the true benefit is it did serve as that catalyst moving forward for the manufacturing sector and the resource sector as an ancillary benefit as well. So this slide just kind of shows you that although yes, it is a current impact, it was an impact going into it. It's just now we are starting to see, as Jake kind of pointed out, the supply chain starting to shake out and move towards a more diversified economy, which helps us a lot, specifically when it comes to your largest trading partner just not wanting to play ball. However, I am an eternal optimist, so I'm going to make the best of a interesting situation when it comes to our friends south of the border. Now, what you're looking at on the left there is our real GDP forecast by province. So if we dissect it by province, I haven't said the sentence in a very long time. Alberta's going to lead the pack. We're going to lead our peers in terms of our growth. Not only did we, but the forecast is for us to lead growth going ahead. And the reason for that, it's not overly complicated. We are just not as sensitive to what the U.S. is tariffing. They needed our resources before the geopolitical uncertainty that we just entered into. They definitely need our resources now. As much as he likes to say he doesn't need it, he needs it. Especially, and the refineries down south definitely need our oil as well. So Alberta's actually positioned fairly well in terms of our sensitivity. We're going to avoid the larger economic impacts of the worst of the economic impacts, which can't be said for our peers on each coast, right? You got Ontario with the autos and steel, Quebec with aluminum, BC, New Brunswick with the lumber tariffs. So overall, it is a interesting situation. We could get asked what our biggest concern is going into this year. It's the trade war trade renegotiation that's currently happening with the USMCA CUSMA. However, we don't think that there's necessarily, I personally don't think it's necessarily about just getting a renegotiated deal. It's about concessions at this point, getting concessions in the right areas, and just the economy doesn't like uncertainty and volatility. Whatever the rates are, whatever the deal is. The economy just wants to see a deal so we can start to find the most efficient way to take our resources and our product to the right markets. So overall, we're kind of entering that final period of uncertainty, and I understand that final period of uncertainty with who we're doing south of the border is a two-pronged situation. However, there have been some positives, right? We had SCOTUS strike down the reciprocal tariffs or whatever quote-unquote fentanyl tariffs they had on Canada and Mexico, which is kind of reduces the importance of having to rely on re-upping the USMCA. We don't necessarily have to rely on that because their SCOTUS essentially came out and said these tariffs aren't allowed to be in place for longer periods of time. So that doesn't generally benefit them longer term. So Alberta's leading the pack, and then we made this slide. And then if you roll to the next slide, we live in a volatile world in Alberta. So that forecast was put together we're about a couple of weeks before that green dot that you're looking at is. That green dot, the Alberta budget was released. Oil is trading at $65.21. The Alberta budget has oil at $60.50. So we were leading the pack at those numbers. And then the geopolitical crisis spiked off, and obviously we all drive, and we've seen the impact to that in our day-to-day basis. And obviously in Alberta, very good economic impact for Alberta when you have an increase in oil. To give you an understanding of the economic impact to our province, every $1 move in the price of WTI is $680 million to the provincial budget. So as of today, it's around $78 because the crisis kind of kicked off again. That's $11.9 billion to the budget swing, which, to give you context, $75 is their break even of the deficit they were running. So our provincial budget, our provincial coffers are going to do really good. Whether that trickles down, I'm not here to comment on, but the provincial budget will do very good moving forward. Our resource sector is looking really good moving forward. There's lots of conversations about memorandums of understanding, about pipeline projects, things like that. If we get another one going, it is a very good place to be in our province moving forward. So overall, Alberta is very well positioned, no matter which way we kind of look at it, in terms of the economic impact of what the forecast is going to be. And even when it comes to the uncertainty of the trade deal, we're fairly insulated from our economic impact on this side of the border. So if we move down, the next question we have to answer is interest rates. Where do we think they're going? This is important for a couple pieces. When the town is borrowing, what is going to happen with interest rates is a very important conversation to have. And when 100% of your portfolio has to be principal guaranteed and tied to the fixed income environment, it's very important for us to understand where interest rates are going to go from here. The slide that you're looking at here, the red line is the Bank of Canada's neutral rate, and the gray line is the actual interest rate. The best way to think about a neutral rate, what rate are we as consumers or businesses completely indifferent about interest rates? It's not so cheap that we're willing to take on debt. It's not so expensive that we're trying to get rid of it. It's our neutral rate. Why that number is very important, it's at about 2.75 right now. We need to be below that number to stimulate growth in our economy. So right now we're sitting at about 2.25. I've seen lots of forecasts, 2.25, 2.50, 2.75. I personally, you'll see our forecast in a second here. I'm indifferent if it's 2.50, 2.25, or 2.75. We just need to be below the neutral rate moving forward to stimulate the economy moving forward. So our forecast actually has us staying at 2.25 for the remainder part of this year, and then lifting a little bit after that. And then we're going to try and answer why by looking at a couple different things. If you look on the next slide, the first piece of why we think the Bank of Canada is not going to raise any rates anytime soon, although the market thinks it's going to, is first, if we actually rewind to look at the businesses and interest rate sensitive sectors, construction, real estate, things like that, they're actually going all the way back to the pandemic. The gray dotted line there, that's their pre-trend growth of where they should have been. And then the red line is where they are now. So they're actually not even caught up yet. So the first factor the Bank of Canada is looking at is to go, how are businesses responding? The businesses that are actually sensitive to interest rates have not caught up to where they should have been pre-pandemic to where we are today. So overall, from the first standpoint, from a business case, interest rates should still stay lower for the foreseeable future. On the next one, which is the most important for unfortunate souls like myself who have a mortgage renewing this year, if you got a dirt cheap interest rate mortgage in 2020, which is basically free debt when the Bank of Canada was at 0.25, this is the final year where we're going to see fixed rate mortgages shake out from the pandemic environment. Why we need to keep interest rates low? To give you context, if we keep interest rates where they are today, that's still a 20% increase to the consumer's monthly mortgage payment, which is a material increase of a consumer's monthly mortgage payment. in addition to other inflationary costs like gas. Obviously, in the interim right now, it's spiking. So Bank of Canada is materially smarter than I am. They see this data. So that's why if you look at any forecast, not even just CIBC's, probably when you see them starting to hike interest rates, probably in the 2027 range, right when those mortgage rates start to come off, because they want to make sure that all of us as consumers have fully shaken that off before they do anything else with the interest rate environment. And then on the other slide, the one big detriment or concerning factor that people can always look at is if we keep interest rates too low, inflation is going to stay high. Well, the current impact to inflation right now is obviously commodities running because of geopolitical conflict and the price of gas running higher. The reason the Bank of Canada and the US Feds right now don't want to raise rates in response to what we're seeing right now is they are very much largely hoping that this is a temporary spike, because what they want is a deal to come through and then obviously gas prices will come back materially lower. 2 weeks ago, we were living in that environment where crude was trading back around $70 to $68. If the Bank of Canada and the Feds actually hiked rates in response originally, it takes a full 2 or 3 quarters for the interest rate environment, for the interest rates to fully shake out into the economy. So there's a very big lag. So if they did it reactionarily and then the deal happened, all of a sudden they're in a reverse of where they wanted interest rates to be. So they're very much hoping that inflation is temporary in terms of gas and the deal comes through and then and we see what we saw 2 weeks ago where it all comes back to life. And more importantly, in Canada, inflation was actually running in line with the Bank of Canada's target. Their target is 2%. That's where they want to see inflation, and they had it in control in Canada. U.S. not so much because their economy was running really hot, but in Canada, that's where we kind of saw inflation staying. And more important for the town is not necessarily this inflationary number. I say 2% is a very healthy inflationary number. When it comes to budget conversations and economic impact of costs, for you guys, the most important piece, what I personally would say is BCPI, Building Consumer Price Index. That goes into a lot of construction costs and major and capital projects that you guys are doing. That historically has run 2% higher than CPI, so around 4%. So even though inflation has come down, it's always very important to remember it's a rate of change. You're going 2% higher on a previously higher number just because it's come down. You're just growing at a slower rate. So you can't not do anything. The bill's already been incurred that we have to do something about. So overall, this one is important, but BCPI is a very important index for you guys. It runs higher than CPI essentially moving forward. So on the next slide, where are rates going to go? Very much lines up with what I'm saying. You can kind of see there that the Bank of Canada is staying at 2.25% for the remainder of this year. This is our forecast. And they won't start hiking rates till about mid next year, all the way up to, lo and behold, 2.75, right into that neutral rate where they don't want to have any economic detraction or any economic growth, right into 2.75, right around where we see those mortgage renewals kind of end. However, this is today. Economics is holding things constant. In today's world, as nothing seems to be constant anymore. I'm sure going to walk out of here, someone's going to tweet something, and this will all go out the window. But however, with that, I want to give time for you guys for some questions. If I just wrap it up with a summary for you guys on the next slide. The most important things for you guys looking forward, obviously, CUSMA has expired this year. That is the biggest impact for Canada. We are going to be materially less sensitive than all of our peers, just given our resource base and what our economic impact will be. And then, so we're positioned fairly well relative to our peers. And more importantly, the Bank of Canada's forecast is to keep rates low for now, barring any other uncertainty. With that, pass it to you guys for questions.
Excellent. Thanks so much, guys. Councillor McGonigal, questions?
I just have one question. One question. I'm looking at the diversity screen, and does that represent what we're invested in, or are we part of that? Because it's showing 22% of our investment in province of Ontario. Province of Ontario is the most hard hit. Their GDP is not great. They're hard hit on CUSMA. They're losing a lot, and they're not, I don't see where they're doing a lot to bring it back. And I'm wondering why we're so heavily invested, if we are, and I may be wrong, but if we are in Ontario.
Great question. I'll start. Maybe James, if you want to add as well. There's two things to remember when you're looking at the issuer diversification. Your points are very accurate. Yeah, so the points are actually very accurate, except the most important comment I would say is that credit rating table you're looking at on the far right. That is the ability of that issuer's, that's issuer's ability to repay the debt. So all of them have investment grade ratings. The province of Ontario has an investment grade rating. They all pay similar interest rates. Province of Ontario itself has very large debt issuance, so has a lot of liquidity. When we're looking at the credit rating issuance, we do have to have a minimum amount of provincial issuers given the investment policy from a diversification standpoint. However, we want to make sure that we give it to provinces that it can actually be liquid should funds be required. Like if we bought debt of the province of Newfoundland, that debt would be materially smaller.
Okay, thank you.
Any other questions? It's pretty thorough, guys. Appreciate it. Well done. Thank you
very much.
And yes, it's unfortunate that a war has to take place to save our provincial government's budget. Just a shot, as usual. Aquatics expansion construction update. Kaylee?
Good afternoon, Mayor and Council. I'm here today for a quick update on the construction for that aquatics project that we're working on. We'll go briefly through what's happening. In phase 1, we continue to work through the deficiencies on the tiles. There is quite a bit of tile in there. We're pretty much done putting in new tile, so now we're just going to be wrapping up behind that any of the finishing deficiencies on that work. The water slide is pretty much the tile. That was kind of the area where we had the last little bit of tile to go in, and that's pretty much wrapped up. So we're just going to finish up the last touch of details around that water slide and then that platform, and we should be pretty much wrapped up in that area. It was fairly intricate with getting some of the railing and tile up in that area. And all of our sand pressure tests, or sand filters, are being pressure tested. That's just part of our equipment, and it seems to be moving along just fine. So that's a nice area to not have any deficiencies, because it's an area where it becomes hard to go and track back where that deficiency may be in the system. With phase 2, you'll notice if you head to the facility, we have the field house closure. When you walk back in there, it's quite open now because the big yellow beams are gone. So it actually opened it up quite a bit. That work is complete along with any of the block work that was in there that was kind of wrapped around it. And that just facilitates the tying in of the renovated lobby space into the field house so that it all ties together. Right now, our viewing area within the pool space has its dry pack pretty much complete, so we'll start to see that last little bit of tile to go into phase 2, and that will start to really wrap up the tile work within phase 2. Largely, our basin is complete, with just a little bit of work in the gutters and the tie-ins where some of the joints come together. And then we get into just the staff change room and the showers, and so largely that is the last bit of tile that's left. So we're getting into those smaller spaces. In the lobby area, that's where we're going to be tying everything in together. That's actually coming along quite quickly. There wasn't a lot of work in there, but it ties in the new facility into our existing lobby space and giving it a bit of a refresh, and so that's moving along quite nicely. Within our phase 2 basin space, part of the work that was up in the ceiling, which was refreshing the baffles that were up there, and repainting. So we're going to see a bit of a delay as we do realize some of the work that need to be up in there that we had discussed when we were amending the budget. When we got all the scaffold work up in there, it was found that we knew the paint was coming off, but the extent to which the primer was actually coming off was greater than what they had anticipated. And so that meant we needed to get in there and sandblast it and clean it off. So we have started that work, and it was progressing quite well. We were given a time frame of about 2 to 3 weeks for that work, along with a week of priming. We're in about a week at this point, and they were seeing great progress in getting us done in about that 2-week window. While the progress has slowed down, they've upped their hours in order to try to keep us within that 2-week window. So the sandblasters themselves have been coordinating quite well with Chandos in order to give us longer days in order to keep that time frame where it should be. There's been a shift because we are taking that primer material off, our sandblasters are doing our priming, so a bit of shift in work, but that then just ties into our painters coming in behind and doing the remaining of the painting of that space. That is a large piece right now that's going to impact our substantial completion date. Our substantial completion date, you will remember, was set for end of August, and we are now looking at an October substantial completion date. With that said, what the opening day looks like is going to be unknown at this time until we get closer to. There are some key dates that once we get that substantial completion that are kind of wrapped in there, one being the filling of the pools with water, and two, it's doing the bacteria testing. Those ones have very specific time frames that are associated to them, and if we get any slippage in there, those don't have a lot of flexibility to make up days, but we won't know until we get closer to those actual dates. Along with that is also understanding our staffing, getting staffing in and understanding where the training needs to take place. So right now, administration is projecting for a November program start. With our change orders, you'll notice in my report that we've had a few more change orders added to the project, and currently our change order value sits at 2.5 million and change. This does include a lot of the CD work, a lot of the change directive work that's taking place, because a lot of the change directive work, as it's completed, we are paying the contractors as their timesheets are being submitted, and the only thing that closes out at the very end of those change orders and realized is just the delay that's associated with any of the work that was done within those change directives. So that's where we are at today, and I'd be happy to answer any questions.
Excellent, thanks, Kaylee. Yeah, it was good to see when I was in around Home Hardware on the weekend, the sandblasters, the compressors were flying and they were sandblasting over the weekend to keep us on this timeline as best they can, for sure. And just so the public knows that, yes, the primer paint on those rafters did contain lead, and with that peeling off, it posed a danger to us. So this is one thing that we will absolutely not sacrifice, having a safe facility to meet some date to have. So this absolutely was work that needed to take place, so that when it's all done, that the community can be confident that they have themselves and their kids in a safe building. So appreciate all the work that you're doing to keep their feet to the fire. But yeah, a little bit of a delay here, but not a big deal compared to the safety priority that we have on this project. So any other questions? Council, pretty thorough. Councillor Nychuk.
Thanks, Mayor Snodgrass. Thank you, Kaylee. The substantial completion date was October. Sorry, I couldn't quite hear.
Yeah, our substantial completion will be October. That doesn't necessarily relate directly to an opening date, because from there we have our staff resourcing and training and our programming that gets opened before it can begin. I don't know the inner complexities of what will shift those dates around to an actual opening date, and that will be known as we get closer to.
So we had talked previously, and this probably isn't your wheelhouse, but on that staffing and training piece, I believe there was maybe some investigation to whether that could happen outside of our existing facility. And I don't believe I ever heard where that landed, if we're able to do that, or if we're actually waiting for the facility to be complete before we're going to try training staff. Like, if there's accreditation and things to deal with a pool and water and safety, I would think any pool would do. It doesn't need to be specifically this one, but maybe that's me being naive from a non-lifeguarding professional perspective. So
I only have very little information on that, and then I'll let Riley chat, but What I do know is the water feature piece is specific to our actual facility and the training that takes place with that. With regards to the lap pool, I think my understanding is it's just a matter of when we do recruit, what training they have available and where we need to maybe beef up training or add training in, but we won't know that until the staff have been recruited. But I don't know the timelines on getting all that done, so I can leave that to Riley to speak to.
So we did look into that. There was problems booking facilities in a way that would let us do that, because we're basically taking over facilities for large blocks of time. And as Kaylee mentions, there's a lot of site-specific challenges, like when we're trying to train on our SOPs or our things that are specific to our pool, our layout, our features that need to be done in the place. The offsite stuff was mainly in terms of accreditation, in terms of maintaining NL designations and et cetera. But yeah, we were running into some challenges with booking the space. And there is some benefit in doing it at our location. So that's where we're at.
Any other questions? See none. Thanks, Kaylee.
Thank you.
Development permit application, Gennady.
Oh, there we go. Okay. Proceed. Hello, Mayor and Council. Today we have a request for decision for a major development permit application at 1227 Sur Street Southeast. It's for the development of 4 commercial buildings with variances. Well, could you go through the presentation at the end? And then just starting from slide 1. Just scrolling down, yeah. It'll start when it says regular council meeting. Should be on page 28. 95 of the agenda. Oh, 95 of the agenda. Okay, yeah, so I would just scroll down further. There we go. Yeah, so just the first slide. Okay, yep, this is good location and context. Okay, so for mayor and council reference, this is at 1227 Sur Street, which is just south of 12th Avenue and west of 3rd Street. It's also adjacent to the co-op site. It is a vacant lot. Next slide. There we go, original approval. There was an original approval which was granted on November 6, 25 of last year for this development permit with the following 5 variances: for a front setback, for a secondary front setback, for a primary building, for a frontage build-out, and for transparency. The applicant has since come back to administration and wanted to revise their originally approved development, and it was presented to a committee of the whole on April 13th, where administration received feedback that identified some gaps in the transparency and accesses of the development, especially when it came to buildings 1 and 2, which were facing the frontage of the site, 12th Avenue. Committee of the Whole directed administration to work with applicant to really bring those gaps to compliance, and that was in regards to transparency and access points, which administration has reviewed their proposal and is now bringing it back for decision. Next slide. The additional request will have an impact to the following original variances that were granted for a secondary front setback, for the frontage build-out, and for transparency. The original approval did grant a secondary front setback variance of 13.36 meters, and with additional request, which is meant to reduce the width of building number 2, it will slightly modify the secondary front setback to 13.39 meters. There will also be an impact to the frontage build-out. The original approval granted 59.5%, whereas proposed impact will bring it to 57.73%. And in regards to transparency, the applicant did take the feedback we received previously at the April 13th meeting, made efforts to really meet the intent and goal of transparency, which is to ensure that the buildings that are fronting 12th Avenue, building 1 and 2, are fully transparent. Previously, the material that was shown, which was meant to be spandrel glass, would not have met that intent, would not have been transparent as intended. And so the applicant has revised the material that they're proposing to provide fully transparent material in terms of the glass. However, given the original approval was for 45% for building 1 and 42% for building 2, the proposal for building 1 will reduce it slightly to 44.5%. The applicant was able to achieve that by essentially replacing the spandrel glass material with material that is fully transparent, but did get to 44.5%. We do think that visually that should be a negligible difference when you just perceive the buildings. Therefore, administration would be in support of that. Next slide. Administration did complete a planning analysis, so we did review the proposed development of the 4 commercial buildings against intent and vision of the town plan, the South High River Area Structure Plan, which is it's subject to, and the land use bylaw. Overall, the goals, the development is consistent with the goals and policies that we do include in these documents. And as it regards to the land use bylaw, where the applicant is asking for the additional variance requests, the overall development is consistent with the intent of the neighborhood center district, except for the variances requested, which we'll get into further. Next slide. Now, I would like to outline the variance requests which were granted with the original approval, which would not be impacted, but would remain. The first one is the front setback. The requirement that we have is for the front setback of a building to be between 0 to 3 meters, whereas approval was granted for 3.5 meters. This was due to site constraints, because there was a 3.5 meter utility right away in the front that prevented the building from being any closer to the property line. The primary building height, the required standard is for buildings to be between 2 to 5 stories in the neighborhood center district, and it was originally approved for 1 story for buildings 1, 3, and 4, with building 2 being 2 stories. The rationale really was a combination of, it was really driven by market conditions, what the developer of the building of the project was really able to achieve and accommodate based on market demand for tenants. Next slide. Today, as a request for decision, administration has the following three variances which will be further impacted. Therefore, they require your decision. This would be the secondary front. And they are driven due to the reduction of the width of building number 2. So the reduction of the width of building number 2 subsequently impacts the following original variances. The secondary front setback is being slightly modified. The location is slightly changed due to the reduction of the building. However, there is a minor change from 13.36 meters to 13.39 meters. The frontage build-out was originally approved for 59.5%, but the proposed reduction of the width of the building is going to reduce it to 57.73%. Administration did review the frontage build-out requirement and did acknowledge the pocket in the northeast corner, which, while is being used towards the calculation of the requirement, is not practical for building placement. So that is one of the rationale that administration has identified as using towards being in support of the proposed frontage build-out variance. And then the transparency. So when this was brought previously to Committee of the Whole on April 13th, it was one of the items that was identified by members of council, that the material that they were proposing, which was spandrel glass, really did not align with what was the intent of transparency. We're really looking to ensure that the view into the buildings is fully transparent. Spandrel glass would not have provided that, and so the applicant has worked to meet the intent that we were looking for. They were originally approved for 45%, but with their with the replacement essentially of the spandrel glass material, they were able to get it to 44.5% without further altering the design of the building around the spaces where that glass would have been replaced. And that would be 44.5% from the originally approved 45% standard. So again, through the effort that the applicant has put in, we do think that we can support it because the difference of 0.5% should visually be negligible to a regular bystander. Next slide. So here, this is a 3D view just to give you a clear indication of what the applicant is now proposing. Where they are showing the playground is now on the ground. That is where the commercial retail unit is being removed, essentially, and the building width itself is being reduced, triggering the frontage build-out request for variance, as well as a minor impact to the secondary front setback and to the secondary front setback. And you can see for building number 1, which is adjacent to it, that it is now fully transparent. However, just replacing all of that previous spandrel glass really brought it to 44.5% rather than the originally approved 45%, which we believe we can still support as it's meeting the overall intent for transparency. Next slide. Then they have also provided a rendering of how you would perceive the two buildings and the frontage of those buildings from 12th Avenue. So you can see clearly here that the windows that they have within the buildings are meant to be fully transparent now towards 12th Avenue. Next slide. The applicant has also taken our previous feedback and included access points to each commercial retail unit from 12th Avenue as well. So you can see here that the north elevation includes multiple doors, which are entrance points towards each commercial retail unit from 12th Avenue from that pedestrian pathway on that side. Next slide. The floor plans here really just confirm and reinforce that access has now been provided both from 12th Avenue and from the south side where parking would be for the development. Next slide. For technical considerations, there are still some technical information that the administration needs to finalize reviewing. The town's engineering department has reviewed the submitted documents as part of the technical review process. And as I said, although some plans require further revisions, we have included a prior to release condition to our notice of decision to make sure that all changes are reviewed and acceptable to the town prior to the release of the development permit. And this would include the provision and completion of the technical review associated with the proposed change to building due, being the reduction of the width of that building. Therefore, as council is now the decision-making authority on development permit applications, major development permit applications with or without variances, with this additional request to vary the previously approved variances, we are seeking your council decision that would be in support of this development permit, subject to the conditions that were in shared notice of decision. And I'm open for any questions.
Thanks, Gennady. So this was previously discussed at a committee of the whole meeting downstairs. Our primary concern was how this was going to look along 12th Avenue, one of our major corridors and entrances to town. So I'm happy to see we sent them back to the drawing board to improve on things, and it looks like they've made some strides to do that. But I'll open it up to councillors for comments, questions, please. Have they met your expectations? Councillor Nychuk.
I just have a really quick thumb button today, I guess. Does it meet my expectations? From today's dialogue and activities, we have these specifications within the guidance for constructing things. And we've had a day of variances and not meeting those numbers, let's say. So this has me thinking at this point in the day, why do we have the numbers that we have? Because we keep bending the numbers. And I understand they don't need to be hard and fast rules, but that just, maybe it's more a comment about just the way the day has gone on these kinds of development things. Is it an improvement over what we saw previously? Yep. Is it a development I see in Seaton and not High River? Yep. It looks like a Calgary contemporary development to me. I'm not going to say it's ugly, but we don't have aesthetic or architectural controls in place within our land use bylaw, so we haven't given specifications to builders that it has to look like X, Y, or Z. We're kind of, we just say, please take into consideration what High River is and design to that aesthetic that exists here, which is pretty open to interpretation. So it's an improvement along 12th. From what I'm recalling, the initial proposal was, it looked like a pretty, I want to say it was 2-story if I'm remembering correctly, and it seemed like a pretty stark wall that was facing 12th, and we all thought, you know, it looks like the back of a building facing a major artery within town. So from a looks perspective, it looks improved. I mean, the renderings that we see here right now look nice. Hopefully we see that same level of vegetation and whatnot. There was indication of some art placement. I don't know how that comes to fruition in that development, but those are my comments.
Thanks, and you're absolutely right. That being said, I think we've come light years from where we are previously. If you look at what else is on 12th Avenue, being Canadian Tire, PV Mart style stuff, we've come light years beyond that. And can we elevate it further and be better? I'm all for it. You're exactly right that High River, we want a little bit different flavor as to what's along these corridors, but the previous one, I don't know, when we were talking about it afterwards, it was kind of the comment of this looks like the back alley of Mr. Mike's facing 12th Avenue, right? And that was our biggest concern. So I think they've done a heck of a job, but through our planning, land use bylaw changes, we can always set things up even further with architectural controls. Councillor Cooey?
Yeah, just an answer to your question, Mayor Snodgrass. I think based on the fact, as if I recall, they had already been allowed some variances. So I think they took the feedback from that meeting and I think have met us at, I think, what is a much more reasonable looking building, especially facing that 12th Avenue. So I think they've met my expectations and done a good job of taking our feedback and putting it into play here.
Councillor McGonigal?
This looks like a properly responsive comeback to what we had requested, and I don't have a problem with it. However, what something Michael mentioned, or Councillor Nychuk, sorry, was vegetation. Do we have any ability to tell them, like we've had this discussion about other places, do we have any ability to tell them we want 3 trees on 12th Avenue or 5 bushes, or can we put any conditions requiring the vegetation? Some of the vegetation in the renderings is kind of, it's okay, and then they show kind of a wild field across the street, but can we require them to landscape?
Yes, landscaping is a requirement, and landscaping was reviewed for this development and accepted for what they did propose. They did not have any variances with their proposal, so really what we'll look for when we look at landscaping is the area that is meant to be dedicated towards landscaping, and then based on that area for a commercial development, there is a formula for per square meter how many trees and how many shrubs are required. So based on that criteria, they did meet that requirement.
So the trees we're seeing in this rendering are actually going to eventually be growing?
I wouldn't say that the rendering is perhaps reflective of what the landscaping plan is, but the landscaping plan itself should have the required number of trees and shrubs dispersed throughout the site. And then be reviewed for the placement of it.
Do we ever get to see that?
I can certainly provide it if we haven't previously shown that.
Okay. I'd like to see the...
Heads up, she's on fire today, Gennady, so...
They've accused me of driving a D8 cat, so no, I'm just looking to be assured that we don't have this building without these trees. Thanks.
Anyone from this side? Councillor Brookwell.
Yeah, overall, I think that they've done exactly like Kathy had said and Mike said, what we had asked them to do. And in the pictures just above the one that you're there, where you can see all of, and I'm assuming that's where all your green spaces are, and it's just the uses of it. Like that's where all the vegetation has to be. Am I correct on that?
Right, yeah, it would be dispersed throughout that site. Yeah, around the buildings.
Okay. No, overall, I like what they've come back to us with.
Councillor Jones?
Thank you, Mayor Snodgrass. I agree. I like the changes that they've made in listening to some of our requests. It does say in the document about landscape design, the landscape design provides a well-treed plan with a mix of scale and types of trees and planting areas that create a balanced relationship of outdoor spaces within the buildings. Landscape drawings have been revised to include a new playground area on the west side of 2 buildings. So they definitely have, they do know that they have to have some landscaping in there for sure.
Councillor Barton?
Yeah, I'm echoing what everybody else is saying. It's a great plan to move forward with something that's already been approved. I guess the one comment that I have just from the renderings, maybe that's on these major projects, just include the landscape plan or something, the site plans in them so that we can see, or a package to council so that we can see. I understand how it is, like there's requirements on every job, even a house, when you build a house, there's landscape requirements. So, yeah, thanks for the presentation.
Okay.
Okay, thanks, Gennady. Are you back, Vicky, or just, you're good?
No, that's...
You're good, right? Okay, thank you. Okay, I'll ask for a motion from Councillor Brookwell that council approve DP 4002.25, the commercial development of 4 buildings at 1227 3rd Street Southeast for the following variances. I won't go into them in detail. They're all listed there. Number 1 being the secondary front setback. Number 2 being the frontage build-out. Number 3 being the transparency. And that approval be subject to conditions noted in Schedule A, the notice of decision dated July 13th, 2026.
I'll give you that motion, Mayor.
Thank you. All in favor? Carried. One question before I forget. Do we have any idea when Starbucks is going to build? Have they submitted a DP yet? They came to us last year with this wonderful drawing and everything of, well, they're murmuring now. This isn't good.
It's close to being released because I'm in the development agreement now, really. Yeah, with regards to Starbucks, there is a development permit for it. It's close to being issued. There is a development agreement that still needs to be entered into and executed, but essentially that is the last item for planning and development.
Okay, cool. Minor development permit application at 420 Montrose Crescent. Natty.
Okay. Here I have for Mayor and Council a second request for decision. This is for a single detached dwelling development with variances. Bal, if you could scroll down here as well to the same format of that presentation. If you could just keep going. Just to the location and context page. Okay, yeah. It's upside down here, but that is okay. For context, the location of the property is in Montrose. It is located just south of Montrose Crescent and west of 3rd Street Southeast. Next slide. This was a development permit which was brought to the previous meeting on June 22nd to Committee of the Whole, where we were looking to identify what the requests for variances were and see if Council had any concerns. Council did not have concerns at the meeting, and so we're bringing it here for their decision. The two variance requests themselves were necessary for the applicant to apply for due to the site constraints, as there is a utility right-of-way which is going through both the frontage and the secondary frontage of this property, because this property is a corner lot. So the secondary front setback typical requirement is for the building to be between 1 to 4 meters of the secondary frontage, really just to ensure that it has a presence at the front of the property. The applicant here was able to get it to 4.4 meters, but that did require a variance request. And the second variance request is the frontage build-out. The frontage build-out is typically calculated for the front of the property, and it's really meant to take the width of the building against the width of the property line for what it would be at the front setback. Here, because of the utility right-of-way going through the secondary frontage, it does limit how wide the building can be. Therefore, they are requesting a frontage build-out width of 52.41%. Next slide. In terms of planning analysis, the development is consistent with the goals of the town plan, the South Harry River Area Structure Plan, and the land use bylaw, except for the two variance requests, which really are driven by physical site constraints. Otherwise, it is following the South Harry River Area Structure Plan for low-density development in that area. It is meeting the overall requirements of the land use bylaw, save for those two, and also is providing another housing opportunity as per the town plan. Next slide. The variance requests, as I mentioned, are for a secondary front setback and the frontage build-out. And next slide. In terms of the technical review, this was a minor development permit for a single detached dwelling. Service and infrastructure would have been reviewed as part of the previous subdivision of this site, and there are no further improvements that are required as part of the development permit application. The only thing that we did receive was a gradient plan as part of this development permit application, which was reviewed and accepted. Therefore, administration is seeking council decision, and we do recommend that council approve this development permit, subject to conditions in the notice of decision. So once we approve it, it will go through the public appeal period prior to being issued.
Ms. Gennady, questions from council? Seeing none, I'll ask for a motion from Councillor Jones that council approve DP 1039.26 for a single detached dwelling with the following variances as listed, being the secondary front setback and the frontage build-out, and that the approval be subject to the conditions noted in Schedule A, notice of decision dated July 13th, 2026.
I'll give you that motion, Mayor Snodgrass.
Thank you. All in favor? Carried. Thanks, Gennady. Thanks, Corey.
Thanks, Council.
Accredited Agency Award to Safety Codes Inspection Services. Diane?
Good afternoon, Mayor and Council. I'm here to present the Accredited Agency Award for Safety Code Inspection Services. So we had to post an RFP for this service, renewal of the services, because this service actually expires on August 1st, 2026. So as mentioned, we actually posted an RFP on May 27th, and the RFP closed on June 15th. We actually received 2 bids, and the bidders were Davis Inspections Group, Park Enterprise Inspection Services. We were being very specific when we posted the RFP. We made sure we talked about the level of service required, and the timeline required for plumbing, electrical, gas, HVAC, and private sewage. Timelines for delivering those inspection services are going to be on Tuesdays and Thursdays, and for building inspection, the timeline for that one will be 3 days per week, 3 times per week, sorry, and that would be Monday, Wednesday, and Friday. We were also specific in the RFP stating that citywide would be one of the components that the successful bidder will need to have experience in. When we received the RFP, we noticed that the rates were increased from what we were previously, what the rates were. Administration really anticipated that those rates were going to go up, because when we took a look at posting the RFP, we did some research and realized that the numbers for those inspection services was a little bit different than what we are actually doing. So that being said, we know that the rate, right now the rate by law is actually fine where it is. We should be fine for 2026 moving forward. However, in 2027 budget, we will actually have to do some evaluation on that to see what those numbers would increase to be. So right now, after a carefully review of the 2 RFPs, we're looking to award this service agreement to Park Enterprise, because they've actually met our level of service that is actually required. They're actually using citywide right now, and they actually meet the timeline that is required to deliver the level of service required. So administration is recommending that the service agreement be awarded to, I want to say their name correctly, so let me find the form, sorry. Recommending that we award to Park Enterprise Inspection Services. And I'll open it up for question.
Thanks, Diane. Questions from council? Councillor Nychuk.
Thanks, Mayor Snodgrass. Thanks for the presentation. Just for my clarification, prior to the policy section on the document, there's, based on the proposed unit rates, administration has calculated an estimate annual equivalent, which is as follows for each vendor. I might be really slow. I just want to understand what those numbers are, because it's a $68,500 difference between the two, and just trying to understand how that's factoring in what that means, proposed rates and those total numbers, just how that's created, those two that are presented.
Sure. So what we actually did, we took the rates for inspections, we took the rates for mileage, as well as administration that was used for last year, and then we used those number of and compare it to the actual rates received. And so we calculated just to get an estimate and a feel of what that would look like. So that's the numbers that you're actually seeing in there right now.
Okay, so is that cost of service then? Is that what that rate represents?
So,
or that's rates of revenue? I'm still, sorry, I'm still not
that
getting it.
would be the, that's not revenue, that's the actual expense that would cost the town.
Okay. Based on last year's numbers, sorry, is that what you said?
Yes, we use between January of 2025 to December, and based on the number of inspection and admin rates that we that was sent to the town by the existing provider.
Okay, thanks.
So I want to actually point out, and I'm happy you brought that question. The numbers here show that the company we want to award to is a little bit higher, yes. That being said, the actual provider is actually using citywide right now. Yes, their rates might be a little bit higher, but it's kind of, because they're actually well advanced using citywide and administration is actually using citywide right now, it would kind of make sense to go with that provider, even though the rates are a little bit higher. If we go with another provider, administration would be actually doing most of that work, which kind of turn out to be on par if we go with a different provider, if that makes sense.
So you're saying we would have an administrative cost that would balance those two out?
Yes.
Because the cost of one is 40% higher than the other.
It would.
That's the justification, is that we would have administrative or associated costs internally that would either equal that or surpass it.
Yes.
And the benefit is they're using the software that we are already familiar with and using.
Yes, it is.
Okay. All right, thank you. I appreciate that.
Councillor McGonigal?
It looks to me, and I'm happy to say this, as though this area of the budget, you're well under budget right now. You've got lots of room left in your budget.
Yes, yes, we do.
Yes, and you've done well on revenue. So you actually have some budgetary stretching room in here for 2026. Would that be right?
That's correct.
Okay, well, kudos. I wanted to make note of that and to thank you for that.
Councillor Cooey?
Thanks, Mayor Saunders. And maybe I'm just not understanding the dollar. So we budgeted $150,000 for this expense in 2026. It looks to me that the cost could potentially be over that. So do the revenues offset some of this, or can we anticipate a request for an increase in the budget in dollars?
So right now, the revenue does pay for everything.
Okay.
But based on, so right now right now in the budget, we have $150,000 that was approved by council. But based on the increased rate, we anticipate that that number may go up. And as you can see within the spreadsheet, the numbers keep rising each year. So we anticipate that that 150 may go up a little bit more, but we're not sure what that would be yet.
Okay, thank you.
I just wanted to clarify something. We're halfway through the year and you've only used a third of your budget.
That's right.
That's what I'm saying. I mean, you're going to be under budget. And I wanted to make note of that. 51 and 51 is not 150.
Yes.
Okay. Thanks.
Councillor Barton?
Thanks for the presentation. This is good. And while we're listening to that, I just pulled up on the internet, like Park Enterprises has a fairly detailed website and how they connect to other communities. I really like that piece of it. So it's something worth for councillors to look at. Several of the communities around us are using them. So I have, I have full confidence in the decision that your guys have presented to us. So thank you.
I'll ask for a motion from Councillor Nychuk. The council award the contract to Park Enterprises Inspection Services to perform safety code inspections and administrative services in all disciplines. And the council authorize the mayor and CAO to execute the contract with Park Enterprises Inspection Services.
Thanks, Mr. Mayor. I'll give you that motion.
Thank you. All in favor? Carried. Thanks, Dan. Councillor board and committee reports. Who wants to go first? If you got anything. Fine, I'll start. From the last meeting, quite a bit. Coffee with council on Monday. That was good. I even had time to attend. I got proof right there in the front row. I did attend the Highwood Grad. That's always a lot of fun, and somehow they always dodge the weather and have perfect weather for that event, so that was fun down in the park. Big things that went on, one being the integrated health neighborhood and this new initiative that we're working on with Calgary Rural Primary Care Network to better provide doctor access, et cetera. There's a whole list of things that we're working on to along with the doctors, to provide doctor care access in our area. So attended that along with Councillor Nychuk and Councillor Cooey. And Riley was critical to the discussion, so it was fantastic having him there as well. Yeah, I'm being sarcastic. But having fun, not serious. The other thing I was able to attend was Calgary Economic Development. Had Jocelyn, our staff member Jocelyn Dunsmore, and I, along with Shauna and Jason Nolan in town here. Shauna and Jason are location scouts for the movie industry. And so Jocelyn and I and John Scott from that industry that everybody knows, had lunch with executives from Amazon, Universal, Lionsgate, and Paramount Films. Had a great lunch with them and discussing the Foothills area and what the benefit is for them and what the benefits to having film in High River and the economic benefits, et cetera, that come with that. But also side conversations as to how AI affects. Michael and I are having big AI conversations right now, but how AI is going to affect them and the pros and cons as to what that looks like. So that was kind of my last few weeks there with what I was involved with. Councillor Cooey?
Thanks very much. Just a little information from Shepherd Family Park. Obviously, lots of summer activities and events, so I encourage you to take those in. But right now, they are currently constructing a clay oven, which is quite fascinating. Anyone interested in going down and checking this out, they will do some more construction on Wednesday, July 15th, 2 o'clock. They're going to do some filming of this, and hopefully soon they will be firing up and see what they bake in there. We've talked about bread, we've talked about pizzas, we've talked about lots of things, but it's just another addition to the park. So it'll be kind of cool to see that in operation.
Anyone else? See none? We'll move on. Letter of support from the High River Performing Arts Foundation. So I will ask for a motion from Councillor Cooey that Council support the Mayor in signing the letter of support for High River Performing Arts Foundation application to the Building Community Strong Fund through the Direct Deliver Stream as a local infrastructure project.
I will give you that motion, Mayor Snodgrass.
Thank you. All in favor? Carried. Another one from the Performing Arts Foundation. Ask for a motion from Councillor Barton that Council support the Mayor in signing the letter of support for High River Performing Arts Foundation application to be considered as a capital project in the Government of Alberta's 2027 budget.
You have my motion, Mayor.
Okay. All in favor? Carried. Heritage Inn Hot Air Balloon Festival. We'll have to think hard about this one. Ask for a motion from Councillor Brookwell that Council support the Mayor in signing the letter of support for the 2026 Heritage Inn Hot Air Balloon Festival.
I'll give you that motion, Mayor.
I got 1,000 questions on this one. Who's leading this thing? All in favor? Carried. Yay! Council correspondence for information that's attached. A letter from the High River Healthcare Foundation and correspondence regarding building a data center in High River is what my notes say, and I will assure everyone that there are no data centers going to be built in High River. There is one that they've been kicking tires around in Foothills County that's directly across the highway in behind John Deere and stuff, and they hadn't That's part of this beacon data that's all starting to come out in the social media world now, especially because of Government of Alberta's latest $13 billion meta announcement, and all these communities are kind of getting wigged out as to what's coming to them. So the one that's local here that's been talked about, Beacon had an open house last year and that I attended and asked lots of questions on their water use and everything. They said it was going to be air cooled. I don't believe that for a second, but regardless, where that is at this time, yes, Foothills County has amended the land use that would allow a data center to be built there, but there is no development permit. Beacon isn't really looking at it at this time, from what I understand. So there's nothing really happening locally on these data centers. Of course, the Meta one up in Sturgeon County is the big one on everybody's radar, as well as the one in Olds. Are the ones that you're hearing a lot about right now. So, but locally, yeah, there's nothing going on at this time. So, but we will always be keeping our eyes out for and ears out for anything that's happening local, and we'll let you know. Yeah, that addresses the piece that was sent to us. So on that note, nothing else. Meeting adjourned 5:09.